Welcome to the HyperFast Agent Growth Show. Get real strategies, real results, and real estate them differently. Lead generation, team building, AI, and more from billion-dollar agents, best-selling authors, international speakers, and real estate coaches, Kerry Shull and Lesniak. Let's dive in!
Welcome back to the HyperFast Agent Growth Show panel. I'm here today with Nick Bush and Karl Svenson. James Buckley is globetrotting off in Spain, but Karl is too. He's joining us from Mexico. So way to hang in and show up for the panel, Karl. James, we'll get you back next week. Lot of great news and things to talk about today. This is going to be a locked and loaded show. All right. So first of all, we got the big news that I'm sure you guys have heard. We're going to dive into it more and talk about the broader implications for the industry and real estate agents' businesses. And that is Real acquiring RE/MAX. So that was announced. Of course, that doesn't happen overnight. It has to go through approvals and whatnot. But given how it went with Compass and Anywhere, that one went a lot faster than everyone thought. So we'll see how long this one takes. Talk about the implications in that. Also got some news on March home sales, right? So March was a 3.6% month over month decline from the previous month and 1% year over year. Probably surprising to a lot of people because most of the March closings, right, would have been based on contracts that happened 30 to 45 days ago, which was when we got that very, very short-lived interest rate boom, right, where interest rates went, under 6%, a lot of refis, a lot of interested buyers perking up, but then March sales didn't reflect that. Third topic today, all right, we've got a challenging market, obviously, for real estate agents. This is year three in a declining lower home sale period that we're going through. We also have the simultaneous rise of AI. And so question for the panelists today is, will emotional intelligence, right, and connecting with clients emotionally, will that be the new skill that is needed by real estate agents more than ever? And then finally, we are going to wrap up with what are the 3 must-have skills for real estate agents to sell more homes right now. So let's kick it off with Real buying RE/MAX, the bombshell story that's broken in the last couple days here. Nick, what are your thoughts on this, and what do you think it means for the industry as a whole?
Well, actually, Dan, you're more on that brokerage level. You own your own brokerage at a point. You recruit a ton of team leaders and brokerage owners, and so I'd love to get your opinion on that purchase and how it's going to impact agents, so I can maybe better understand from your perspective before I give a perspective.
Sure. Well, let me ask you this question then. You're at the agent level. You've been at I think 4 different brokerages your real estate career. If this acquisition goes as announced, right, RE/MAX is still going to operate as RE/MAX agents. Real agents are still going to act as real agents. Franchise owners of RE/MAX are still going to be in their franchise agreements. Many of them, at least, right? Maybe some of them have control change clauses in their agreements. All right. So, Real essentially becomes a holding company for RE/MAX. Now, maybe they have a longer term integration plan that, has been talked about and that we know nothing about, and only a few people to talk to. But, by and large, from what everyone can see, like RE/MAX will still operate as RE/MAX under Real, just like Anywhere brands are still operating as Anywhere brands under Compass, right? So at the high level, the merger is gonna maybe give some cost reductions because, if some of the functions and things that Real corporate do, they're not gonna need like RE/MAX corporate to do anymore, right? So maybe there's cost savings there. But at the agent level, Nick, do you think this matters at all?
So at the agent level, I don't think it matters at all. I think that for as a personal business owner, it's important where you are, right? Where you hang your license. You want to make sure, like EXP, you get the stock options. There's a lot of way you can recruit and build a downline and make money that way. But other than that, and then we have a sweet cap, right? 80/20, 16K cap. It's like 3 or 4 deals and you're making 100%. So I think those things are what's important, kind of what are the financial benefits of the brokerage. Aside from that, it's what group of people are you connecting with at your brokerage? So for us with the Legacy Mastermind group, we have team leaders, we have solo agents that are doing a lot of business, and we mastermind constantly. I mean, we have something every Tuesday, we have another mastermind, every other Thursday, and I think that's what really matters, because it's all about growing your business, right? Like, how do you get in front of more people to convert? And if you're not learning those skills, then you're not going to do business regardless of what brokerage you're at. Now, I think if Remax agents, Remax, Weicker, Long and Foster, I'll pick on them and just say bluntly, like these are the older brokerages who that don't have a ton of tech and they're not forward moving. And so from my knowledge, and so if they get to get some of that tech influence and new cool brokerage field by partnering with Real, that's great. But if you're not in appointments with buyers and sellers and working on your game to convert people, then it doesn't matter what brokerage you're at. So that's kind of my perspective on it. Now I will
Car
say when I was at Compass, they had private exclusive. It was a cool thing, and I learned how to use it to get listing agreements signed. That today that may have been signed 3 months from that appointment when people weren't ready, but at the end of the day, that's just a skill set that I picked up because I was leveraging a tool that the brokerage have has, and anyone can do that anywhere. So
Yeah, I think no matter what brokerage you're at, you have to look at what they offer and then tweak your conversations and your selling points to buyers and sellers around that. And that can be done from in any place, like you said. Karl, um, what do you think is driving this merger? Because at a high level, you have a company, Remax, that's been losing agent count, that has been had declining revenues for several years, and by doing this acquisition, Real is taking on uh, probably over $500 million in debt. So why do you think they're doing this? What do you think is driving acquisitions like this?
Well, every acquisition is to make more money, right? But I think that everything is data driven now. So it from a long-term perspective, to be able to make more money, companies want more data. So I want to actually kind of answer your question by asking you a follow-up question. Like, because I heard from some of my other friends in the business when there was another acquisition, I don't know, a year or two ago, that everything behind it was to get more data and eliminate a bunch of agents from the business so that way the brokerage could make more money. So, I mean, do you think that that's in play here? Do you think that that's where a lot of these models are going, where they want to replace the low level agents and only have like, the top 1 to 5% of agents doing the business so that way they can have a bigger bottom line?
Yeah, I think if they could, they definitely would, and you look at like Compass and Real, hugely owned by private equity, right? I think Real's over 40%, not sure the exact number at Compass, but I know the founder there, his percentage is very small, under 5%, just like the founder at Real. And right, so these guys are controlled by Wall Street. I've never known like Wall Street, Goldman Sachs to really have the best interest of consumers and people, right? I just that would be shocking to me if that was like ever true. So I think if they could replace agents and reduce costs and keep more of the commissions, they could. I think the agent plays such a critical role in what I'd call the last mile of the service, right? Getting that person to actually write the offer to list the home. So I don't know if it's possible yet, But if it was, I think companies that are largely owned by Wall Street would certainly do it. Which again, not to make this about EXP, but uh, we were able to be profitable early on. We didn't have to like give up a huge chunk of the company, right? To have the runway to scale. Like they scaled and then did the IPO without giving up, a ton of the company. So I think at the time of the IPO, Glenn owned 50%, agents at the company owned 25, 30%. So a lot less, institutional influence in that model, which makes me feel better, right? About, about where I'm personally am at. But I don't know if they could replace the agent. I do think they want more data, like you said. I do think they also are banking largely on attached revenue and other recurring revenue that they hope this will drive, right? So mortgage, title, insurance. Like if there's a play there, maybe. However, a lot of that probably goes to the franchise owners, and they're not going to want to give that up. So we'll see. I think it's interesting to see how Wall Street reacted, right? Remax stock, huge jump up. Reels like went down 30%. They're at, the lowest they've been, I think, in years on their stock price. So obviously there's short-term concerns, but we really won't know for years to come if this works or not. There's been, mergers in other industries that work, some don't, some do. So, we'll see.
Yeah, I almost feel like there's a race for agent count also, just like overall agent count. I know KW was kind of running that race for a long time, and that was the big, kind of stat, right? Oh, we have the most agents, and maybe there's a race for agent count to kind of prove that it's the best place to be also.
Well, and bringing up Keller Williams on the heels of this conversation, right? That could be interesting as well because Gary Keller has, sold some portion, right, to private equity. Uh, those guys are going to want to return too, right? Now KW is like the big fish national brand, old model, certainly the best of the old model probably, but like
Yeah.
they're the big one left. So, um, it'd be interesting to see in the next 12 to 24 months if we see an announcement that KW is being sold to someone.
That'd be a major splash.
Definitely would be. And they're not public, right? So like we don't know their numbers like we did with Anywhere and Remax, but you know, from what I've seen in smaller and subset other like markets and just broker data I have, like, they are certainly losing production. They're certainly losing agents. Offices that lose productive agents are generally only replacing them with brand new agents. So you got to think that they're having like a similar, thread line as Remax or Anywhere, maybe better, who knows. So yeah, like those, I forget the name of the private equity company that bought part of KW, but they're in it for profit. They're private equity. So yeah, it would be interesting to see what happens with them. I don't want to speculate too much. They are certainly, of the old model brands, the most that I would say are culturally and maybe a little bit economically like similar to the EXP model. And you got to think like, do Compass, does Real, would they have the wherewithal for a acquisition like that, based on the debt that they took on with their two deals? We'll see. Any other thoughts on this bombshell announcement from either of you guys?
I'm just curious how much runway they have from a cash perspective, taking on that debt or, I mean, I guess they have capability being publicly traded to just do a stock dilution to raise more capital. But yeah, I mean, I'm just curious about like what kind of runway they actually have, because if everything's driven by data, I mean, that's the long play, right? I mean, it's going to take years for them to be able to realize additional revenues, from or at least net profit from an acquisition like that.
Yeah, well, I mean, Remax they obviously have the revenue, the EBITDA, all that to cover the debt. So there will of course be like some big upfront integration costs that Real will have to take on, and then I'm sure they sharpened their pencils and said, okay, of all the Remax corporate expenses, this is what we can eliminate because we don't need like two chief operating officers, right? Two chief accounting people. Like we can eliminate like these couple hundred jobs. And based on that, we think we'll have like a debt service coverage ratio of X, right? And we probably don't have enough data and insight to really know that. I played around with AI to look at that debt service coverage ratio, and it was estimating like if everything goes perfectly as planned, it's probably at a 2.0, and that's like right at the margin where it's somewhat safe. But if things don't go as planned, or agent count continues to drop for Remax and they don't migrate over to Real, or the market slows more, like that coverage ratio could get into dangerous territory pretty quickly. So and if you analyze the deal using like Chat or Claude, it from what I've seen and what I've heard from other people, it's kind of saying like 50 to 60% success rate. So we'll see.
Agents got to do deals. It'll be as successful as the agents doing deals.
Yeah. I mean, the big thing though, if you're like a real estate agent, is like Nick was saying, like learn the value prop of your company, learn how to communicate that to sellers, learn how to communicate it to buyers, and talk to more buyers and sellers and follow up. And like, no matter where you're at, right, you're not an employee of the brokerage, you're an independent contractor with your own business. So yes, brokerage choice is important, but not as important as how you run your own business. Let's talk some news here on house sale numbers. I said at the top of the show, we've got this data out. Home sales have dropped year over year and month over month with the March data. That's the latest data to come out. That's so slow start to the spring based on that. And these are national numbers, so your little market might be different. And that was coming in the period when we would have expected buyers to go under contract during that interest rate dip that quickly went away with Iran. So who knows what that's going to say about April or May. Again, focus on your own business. Don't like read the headlines and think you're going to have a bad April, May, right? So, I think what this tells us, and what Lawrence Yun was saying in the article I read on it, buyers are wanting longer periods of lower interest rates to get comfortable. It's like the rates drop. They've been looking for months. Maybe some of them take action, but others just like, I don't know, for some psychological reason, they need that low interest rate period to last a little bit longer for us to move the needle right there. And, yes, buyer interest or execution is lower, but so is inventory, right? So we're not seeing any really relief on prices. Karl, how do you read all of this data? And is it noise? Should agents be scared, or what should they do?
I'd be curious as to what the fallout is on the contracts, because the Iran conflict started at the beginning of March, and if anybody had any contingencies in their contract that gave them the ability to pull out, I would want to speculate here that you're above average on contract fallout in March, because the headlines create all this fear, and the average consumer buys into the fear. And I mean, for most people, we're talking about the biggest financial decision that they're going to make. and people automatically want to go into protect their money mode. So I think that there was probably a lot more fallout, which probably led to less overall closed transactions as a byproduct of the fear mongering from the headlines, not really the rise in interest rates. Because I mean, I would imagine probably more than 50% of people that went under contract in February, they probably locked in their loan terms in February. So it probably, like, any interest rate movement probably didn't have an impact on the majority of buyers in that situation. But
Yeah,
I think people
you
tend to
think some of
be
them were
short-sighted.
you think some of them were like, oh, the Ayatollah's dead. I shouldn't buy this home now.
Well, people tend to be short-sighted. So like, even though I like, it seems like there's not really a resolution right now. I think at this point, like, anybody that is really has like a big why behind wanting to move, I think that they're going to move anyways. And April tends to be, for my pipeline anyways, April tends to be like one of the biggest months of the year. So I wouldn't be surprised to see a complete 180 when we get to April figures.
Yeah, so I mean, you can give us obviously your data comes in as a leading indicator when we get these stats from NAR, right? It's a lagging indicator, because applications have to be made and approvals made, 30 days or so before they buy the house, typically, right? As opposed to these stats coming out 2 weeks after the month. So, are you saying based on what you're seeing, you think April is a lot better than March and last April?
For my particular pipeline, slightly better this
Okay.
April than last April, and definitely bigger than March. And I've seen a lot of people that are move up buyers. So um, I think the people that are going to be most impacted by the headlines are going to be the first timers, right? The move up buyers that have the capability of making the move, I think, because they've already done it before, they're going to be less likely to be swayed by potential fear mongering. So I think the data is going to be different based on what the avatar is for the buyer, what subset is the group. But overall, yeah, I think that you'll likely see better numbers in April based on what I'm seeing.
Over to you, Nick. What are your thoughts
Um,
on March numbers and going forward here this spring?
Yeah, I mean, I think it's kind of sad for the country, honestly. We had, earlier in the year, I mean, it was January or February pod where I think it was Redfin or somebody was predicting that we'd get a ton of inventory in April, May, like spring market, and it's kind of sad to hear that that didn't happen. And the reality is that interest rates are too high, and we need to we need to solve the problem in the country, because if you have a big why and you're gonna buy, right? If you're gonna sell, you're gonna sell. But the reality is like people cannot afford the mortgage payment, right? We're kind of in our own bubble in the DMV area where the AMI is 120, right? Everybody's making, 110, 120, 180, right? Quarter million and up, right? But I mean, that's not the median income in America. People are making 50, 60, $80,000, $90,000, and they can't do $3,500 a month. They can't do $4,000 a month. So, and at least in our market here, I mean, what does $300,000 buy you? What does $400,000 buy you, right? There's no entry point for a first-time home buyer in our market, right? Making, 120, right? And they got to pay $3,500 a month for mortgage. The math does not math in that way. So you need a lot of double income to make it happen. And I think, as Karl mentioned, the move up buyers, right? And so that's the buyer activity, right? Then we have the listing activity. Well, why are homes not selling? For a couple years, we were like, oh, golden handcuffs, 2% rates, 3% rates, people aren't moving. I don't, that's those aren't the conversations I'm having. The conversations I'm having are, okay, yeah, I have $100,000 of equity. I have $150,000 of equity, but that is still not enough for me to go from, 400 to 600 or 500 to 800 plus. And now at, 800, 900, I have closer to a $6,000 mortgage, right? Like, cool story. I have a ton of equity. I'm banked. But if I put 150 down on my, $800,000 house, I'm still in the five and $6,000 for mortgage. I mean, if you got a $300,000 household, that's great, right? But if you're a 120, $150,000 household, you're still tight. Um, and what is a move-up buyer? Someone who owns a house and likely has a wife now and kids and daycare expenses and real life stuff. So they're like running out of space, so they have to move up. But I mean, I have three kids. Like we're paying $2,500 a month in Fredericksburg on the low end for school and daycare and stuff like that, right? Like people just can't afford to buy homes, and then people can't sell their homes because they can't afford the next thing they're going to buy. So at this point, we've had 4 years of 6, 7% interest rates, and they have to come down. Or the economy can be stimulated properly, and like the real estate market is not going to move and we're just gonna have, and I would predict that the next quarter is gonna be, similar to the news will be similar. I don't think it's gonna be like, oh, Iran is, that Iran conflict matters to people with a lot of money, right? If you have a ton of money in your stock portfolio and you're buying at, $1 million, like you're paying attention to the Iran conflict. The average home buyer, home seller, 500,000, 600,000. They're not like considering their 401k or their stock portfolio as a tool in that way, right? And so that's not who we're talking about when we're talking about Iran. We're talking about wealthy people. And so the reality is like rates are too high still. They've been too high for years. And your boy, whose mind is slipping me for some reason, he needs to
Jerome,
figure, yeah, Jerome Powell, he needs to figure it out.
he's out now. Yeah.
Yeah.
But
Maybe
people
he
are
might
still
stay
reading
on
the
though, right?
headlines.
Jerome might he might stay on, but not in the chairman role, right? Usually, I think usually out of deference to like a new chairman coming in, they don't stay on for the rest of their term. But I think it hasn't happened in like 60 years, but because of how Trump treated him and worries there, there's I think a lot of people thinking he'll stay on and try to influence the rest of the members still, but we'll see on that.
And I've been saying that's really going to be the key driver. Everyone's been paying attention to, the appointment of the new Fed chair. But if you think about it, Jerome tends to be fairly hawkish, and if he didn't stay, then it gives the opportunity to appoint someone else to the board. And if we got another Dove in there, then the likelihood of getting additional cuts and seeing additional rate improvement, I think that increases substantially. So I think it has nothing to do with the new Fed chair. I think it has everything to do with, does Jerome stay or does Jerome go?
Yeah.
Well, and I think as agents, we obviously don't control that or interest rates, right? But we can control looking for creative solutions to help people with the payment issue, right? If this is a payment issue for, especially for the people moving up, right? Well, how do you find creative mortgage products? How do you negotiate buy downs? Maybe you go take some Pace Morby courses and learn the sub twos, the contract for deeds, assumptions, seller notes. Because there could be a lot of people out there that have a ton of equity, they're sitting on a low rate, and maybe they'd benefit from seller financing or a contract for deed deal, and now they can defer capital gains taxes, and they've got a better tax strategy, and so it works better for the seller and the buyer because they get a lower rate. Um, agents don't just sit and check like CNBC every day and pray for lower interest rates. Like figure out solutions. There's an opportunity there, I think.
Yeah, I agree. I think you have to be, educating yourself constantly and educate your clients and let them know like, hey, if you do have a lot of cash, you have some leverage. I mean, Carl has the bridge loan product that is great. I mean, I think I mean, you have a year to sell your house, right? You only pay a point to do that. I mean, that's just like a ton of leverage to go out and find something that works for you. So I think it's, on buyers and sellers to find skilled agents that have, access to that information and resources and ways to find folks who are willing to, do a deal in that creative way. But I think that like when we talk to buyers and sellers are just, sellers who are going to buy something most likely, right? They're not gonna go rent. It's just like, okay, well, what's the mortgage payment? What's the mortgage payment? And I think I mean, Carl, you look at these more than me. Debt to income ratio is always the most important factor, or one of the most important factors when qualifying, right? And if somebody's doing, what, 120, and maybe they're netting, six, $7,000 a month. So if you're dropping $3,500 of that on mortgage, and then you have a car note, and then you have kids, and then you gotta save money, and then you have
Gas and food
groceries,
ain't cheap anymore, right?
it's
There's nothing
like
left over. Yeah.
yeah, it's nothing left over. So it's like, but on the other end of that, and what we have to explain is, well, rent isn't cheap either. It's 33,000, $3,500 a month to rent. So you're paying it somewhere. You might as well pay for your house. And I think that continuing to get people's mind wrapped around the wealth building aspect of that is important. So you should still be buying, you still be doing real estate transactions, but you have to be able to afford it. And I've actually kind of taken a step back a little bit and like, hey, like you don't have to rent your primary, rent it, but buy some real estate, right? Like if you have 50K laying around or 5%, 20% down or something, rent your primary if it's cheaper. I mean, I live in Fredericksburg. I could buy a house in a neighborhood, a $700,000 neighborhood and pay what, $5,500 a month, right? But I can rent in that same neighborhood for $2,800 a month, $3,200 a month. It doesn't make sense for me to buy a house, right? It actually is not financially intelligent in Fredericksburg for me to own a house, right? But what are you doing with the delta? Okay, you can rent for 28, your mortgage would be, that's easy math for me. You can rent for 3,000, your mortgage would be, 5,000 if you bought in this neighborhood. But what are you doing with the extra 2,000? Are you investing it or are you just
Yeah.
blowing it, right? Or okay, the 20% you were going to put down or the 10% you were going to put down, why don't you find a low price point market and like invest it so you can get some cash for later? So I still think you have to find real estate to purchase to build wealth because that's what it's all about. But it doesn't have to be your primary residence.
So have
To
you used
piggyback
that
off of
savings
that,
that you created by renting your primary to get rental properties or investment properties?
Can you say that again, Dan? Can
Have
you
you used the savings and from renting versus owning in your neighborhood and the saved down payment? Have you used that to like either invest or stay invested in other real estate?
Yeah, so I have my DC property, and now I'm looking at properties in like Caroline County, Orange, King George, just kind of like the area around here to purchase because there's just so much opportunity and to cash flow, and then eventually, then you have enough cash flow, doesn't matter, you buy what you want. But I think that's just like a great thing to put on people's radars. Like, hey, you can rent in this neighborhood, but we just need to like get you to a point where you're buying some real estate, right? And I think that the hurdle then becomes, if you're buying as an investor, you have to put 20% down. So I think that what you're explaining to people is that like you don't have to buy in your market, right? Like I'm not gonna put 20% down on the 300,000 and cash flow $300. That's not worth it then, but let's find a different market in, Southwest Virginia or, Virginia Beach has always been a pretty solid market. I know there's an agent in Harrisonburg, which is kind of towards Southwest Virginia winning. Richmond is kind of perched up, but like surrounding Richmond is really good still. So I think it's just like, buying some real estate, you have to do the cost analysis, and like we were talking about the Iran conflict and with the wealthy, how wealthy think about their money, right? And like it's kind of like, okay, well, if this is cost X and I can buy this for Y, like that might be the better investment. And I think that traditional buyers are just like looking for a place to live and own. And they just have to be smarter about it, and that could be house hacking and renting out your basement or Airbnb, right? But you just have to think about it, you know, a little better.
Yeah, all great points. One of the things I'm doing to get better at the creative financing solutions, present more options to clients is going to a day at Pace Morby's office in June. So I'm looking forward to that and learning like sub twos, notes, contract for deeds. Because if I know that better, right, I can use it for my own investing, but then also to present more solutions to clients. And events I think are really where the magic happens, right? It's not just like motivation and getting all rah rah rah, right? Like it's about meeting other people that are succeeding at high levels, both in the crowd and on the stage, uh, learning what's working in their business, and then learning what systems to implement. And that's exactly what we are going to be teaching next week at the HyperFast Agent Summit in Chantilly, Virginia. And we've got some amazing people coming in. I know Nick and Karl, you'll be there. You'll be sharing things. We've got John Cheplack, top real estate coach for team leaders by far. I think to like get on a phone call with him for 20 minutes, it's like some ridiculous amount of money, like $3,000 or something for 20 minutes. So that's the kind of like value you'll be getting. And if you get a VIP ticket, you even get to go to the private lunch with him, the mastermind in our office the day after. So, we're gonna have over a dozen speakers, team leaders that have sold billions of dollars, solo agents that are killing it, an AI leader in the industry that's gonna just show you this system that is kick ass, will dramatically reduce your costs, whether you're a solo agent or team leader, give you access to like a 24/7 PhD level staff.
Great.
So you save money, right? Spend more time talking to clients. So you got to get to this event, right? The link will be in the show notes or comments. It's hfasummit2026.com, hfasummit2026.com. So get your tickets, get in that room. Let's move on to our next question here. Market is obviously challenging for several years now. AI is becoming more and more prevalent. Will emotional intelligence be the new skill that agents need to have at a higher level? Nick, what do you think?
Yeah, I mean, I don't know how you're an agent without emotional intelligence, right? Like that's the whole job, to coach people through. I think people don't realize that, I mean, we're in sales technically, right? I sell real estate, but a lot of it is just helping the client through, right? And understanding their situation, and giving them the correct advice for them, and framing the real estate conversation around their goals. And so I think emotional intelligence has always been the most important thing. I think it's how you pick up new clients. I think it's how you retain them, and I think it's how you get referrals, after the transaction, and keep that relationship moving. So, yes, I think that agents should pick up a ton of emotional intelligence. If you don't already have it, like go figure it out.
Karl, what about you?
Yeah, couldn't agree more. Clients need reassurance that they're making the right decisions. There's a lot of emotions in play because at the end of the day, like they don't have anybody else to turn to usually to reassure them, right? And I think like there's a difference between responding and reacting, right? So when somebody gets emotional with you, it's easy for you to just react y- without really pausing and thinking. If you pause and think, then you can respond in a much better way. That's going to be that the client's going to be more receptive to, and how you respond is going to ultimately determine whether you win their business or not.
Yeah, I think you mentioned Karl earlier in the show, like will these mergers lead to companies replacing agents? And I kind of responded like if yes, if they could, but I think the last mile is the issue. And that last mile is meeting the client when they're ready to begin the process,
Mhm.
like helping them at the end of the process, and any of the like high stress fear parts that come along, right? And that is all about connecting with them, making them feel like you've got your back and you understand what they're going through, and then transferring your confidence to them. And that is all emotional intelligence, and connecting them with them as quickly as possible. AI is not going to replace that, right? It's just gonna, and hopefully if you're it'll give you the ability to focus more on developing those skills and executing those skills and less on everything else. And that's where I think, agents have a huge opportunity. Let's move on to our last question here. What are the 3 must-have skills for real estate agents right now to succeed in this market? We'll start with you, Nick.
I had three like the whole time I was banking. I should have wrote it down. I think number one, you have to be able to problem solve, right? We've been talking about it all episode, right? Problem solve around the conversation with the interest rates, right? Problem solve around, helping somebody through the transaction. And I think you have to be quick on your feet. You have to understand the market at all times, and you have to be able to like know what your client needs and like be able to solve the issues that they want. I think that's one. Is this just for clients, or is this just in general that agents just need to be able to do?
Any skills they need in general. Yeah,
Okay.
top three.
I think you have to be able to lead generate effectively, systematically, and you got to use AI to help you do that. So I loaded up. My business is basically like ChatGPT. I think they could make a Nick robot now if they wanted to and let him walk around because I'm just in chat all the time. But it helped me just recently, 2 weeks ago, create a schedule for myself, right? Just to kind of schedule I can follow day to day. There's something different happening every day. I have time blocks. And I had like a super productive last week following it. And it gave me a lot of leverage too. So I think you have to be able to use AI to grow your business. I lost a listing. I didn't really lose it. We canceled a listing. And I had from November to February, didn't sell. Listing appointment with the seller yesterday to kind of get the listing again and put it back on the market. ChatGPT helped me put together kind of a relaunch plan, right? Using all the old data, all the old feedback, all the old showing activity. So you have to know how to leverage AI to be able to have conversations with, buyers and sellers, to kind of like refine your expertise. And the third thing is you have to know, like, as an agent, what your job is, right? And it's like three things. It's lead generate, go find new business every day, manage the business that you have already, right? Get that stuff that you have under contract to closing, and then follow up on all the leads that you had been calling before. So you just have to know, like, you know, I have a podcast, we do this podcast, I'm on social media, that's all cute and nice. But if you're not talking to people, 30 to 50 people every week and setting, 3 to 5 appointments a week and going on them, you're gonna get phased out. So don't be cute. Like, go talk to some people.
All right, Karl, what top three skills?
Consistency. There's a saying that like 90% of success or 90% of life is just showing up, right? So just be consistent and show up every single day. And, hard work beats talent all the time, right? So be consistent. You got to have the ability to overcome objections and not give up easily. There's circling back to what we were just talking about, where there's a lot of emotions in play. People need reassurance. They need you to transfer your confidence to them that they're making the right decision. And sometimes that comes in the form of an objection. And if you're able to overcome that objection, then you're going to have a higher likelihood of converting more of the people that are in your pipeline by giving them that extra confidence and moving them through the process. So number one, consistency. Number two, ability to overcome objections. Don't take no easily. And then three is building sticky relationships. I've always said to the loan officers in my group that, we're trying to take the client from point A to point B. And, point A is initial introduction. Point B is a closed transaction. And in between is the pre-approval, right? So same thing for agents. It's like you're going to have your buyer consultation and then your seller listing consultation. And then you want to move them through the process to the next call to action to be able to get a closed transaction. The best salespeople don't just go straight down the line from point A to point B. You gotta kind of snake your way through, get into the weeds a little bit. You got to have other talking points and other parts of the conversation that have nothing to do with the transaction, but you got to be able to keep your people on track. So if the better that you get at kind of maneuvering like in more of like a snake pattern instead of just straight line, by being able to get into the weeds and have other conversations that help you connect on a stronger level with the client, the more likely you're going to build a sticky relationship. And the more likely, the more you build a sticky relationship, the more likely you're going to get referrals from that client and get business from your existing business, which doesn't cost you anything. And that's the best type of business.
Yeah. Oh, I agree with everything both of you guys said. My top three, maybe one or two of these are repetitive, but proactive lead generation, right? If you can learn how to do that, I'm not saying drop marketing or lead generation where that you might call passive, right? Because they're coming into you, but if you know you can call your past clients, call your sphere, call expireds, call around your listings, and generate appointments. Solves a lot of issues, right? Obviously, you have leads to work with, but I think too, it makes you better with some of the other things people mentioned. Like you're going to overcome objections better. You're going to advocate for your rate better if you're not coming from scarcity, and if you know you can go out the next day and generate more leads, right? You're going to be abundant and more confident, and so you'll do better at everything else. Number two, furious follow up. I think there's so much fortunes are won and lost in the follow up. It's very rare for even the best people to close people on the first ask. It takes 5, 6, 7 on average to you know, depending on who you're talking to, right? So fast and furious follow up. And number three is getting really good at offering highly personalized service. I think with so much automation, with so much AI, people still crave that emotional connection, that feeling special, right? So if you can provide your service at a highly personalized level, I think it's going to bode extremely well for you, especially in higher price points. So that's it for today. This has been a great show, I think, and hopefully you guys think so too. If you're still listening, I think that means we earned a 5-star review. So tap the 5 stars on Apple, subscribe on YouTube, leave a review on Spotify or wherever you're consuming your podcast, and don't miss next week HyperFast sales event. 2 days if you get the VIP, 1 day if you get general admission. Over a dozen speakers, including the top real estate coach for team leaders, John Cheplack. Again, that link is hfasummit2026.com. hfasummit2026.com. So hopefully we will see you all there and meet you in person and face to face. Thank you for listening today. It's truly our pleasure and honor to hopefully help you grow your business no matter what the market does. We'll see you guys next time.
You've been listening to HyperFast Agent Growth Show with Karl and Dan Lesniak. Real strategies, real results, real estate done differently. If you love this episode, tap subscribe and share with another agent who's ready to grow.